if you to just open your chart for the first time and you look at this chart of Euro USD, the first thing you're going to look at is maybe we have this broken a strong level of support. Previously that was support, and currently the price is retesting it, and you're going to be like, okay, I should be looking for a sell, right? Now that's not wrong entirely, because we do have all the attributes in place for us to be looking for sales, but there's one that is missing. The question is, are you buying or selling at the right place? For example, in this case, we're looking for a sell, but the question is, are you selling at a median price? Are you selling low, or are you selling high? Remember, sellers are suppliers. Suppliers want to supply at the highest price possible. So as a trader here, this is a valid level of support, yes, but a previous support, sorry, which is now resistance. It's a resistance, but is this the highest possible resistance that the price could reach at? That's what we're going to find out in this video. Hello everyone, my name is Paul. In case it's your first time coming across the channel, and in case you've not subscribed, please make sure you subscribe and you give a thumbs up so that the video can reach very many people. So let me just clear this, and we first do a top-down analysis, and then I identify for you guys the valid levels that in case you want to trade Euro USD, you should be targeting, right? So as usual, we're going to start from the monthly time frame. Just a reminder, as a trader, you need to have 3 time frames: direction, structure, and then your entry, right? So you can choose any, but for us here, we first I use monthly, weekly, and daily. Why I use weekly and daily is because we have intraday traders and swing traders, so I combine them so that you can choose any of your choice. And then entry time frames, we have H4 for weekly and H1 for daily. Then refining time frames, we have minute 30, minute 15, and even lower. It's up to you to choose, right? So if my time frames are so big, you can just choose the way I've explained to you, right? So starting from the monthly time frame, we of course talked about this level here, which we expected the market to hit. If you've been watching the previous videos, this was our target when the market was still up here, and the price currently is slightly below, or currently going to retest that area, right? Now, that's one thing we observe. The second thing that we observe, let me just delete that, is when you go to line chart a bit, we do have a bend here, right? A bend here, which gives us a hidden level of structure. So I'm just going to mark here. It will reflect, you'll see in the next lower time frames. So when you go back to the candlesticks, you see that the bends are exactly here, right? So meaning that we expect the price to retest those levels. Now, when you go down the weekly time frame, it will be much more clearer. Now, in weekly, someone may be saying that exactly the person is seeing a head and shoulders, which is true. This is a head and shoulders, right? We have a shoulder, a head, and a nice right shoulder, which has even an M with a lower high, my favorite M, right? And currently the market is retesting this broken level here, which is true. But if you're to observe, we still have something inside here, right? Which I started by mentioning that, is this the highest possible resistance that you want to look for a sell from? If you're a seller, just put yourself in someone who is supplying produce. There's this price, it is high, yes? It is higher than here. So someone who sold here probably has already lost money. Someone who has sold here would be better, but is it the highest possible price you can sell at to maximize your profits, or to risk less? Remember, as a trader, if you're selling, you want to sell at the highest price possible. If you're buying, you want to buy at the lowest price possible. Hence the statement of buy low, sell high, right? In case you didn't understand where it comes from. So let's just clear this. Now, these are the levels that we have marked. Now let's check if daily agrees with our statements that we have put across. So if you to observe daily, we have an impulse that has aggressively broken below this previous support, which is now resistance, and we're having a weak momentum retesting. Those are the conditions that and the rules that we put across when we are talking about break and retest, right? Now, the thing that is left is for us to identify which other possible levels when the market was coming down were not tested, right? The market can sell from here, which is true, if there's a change of trend. We're going to talk about that in a few minutes. If there's a change of trend, it can sell from here. But if there's no change of trend, where is the most likely place the market could reach to? We have already identified this level here in the monthly time frame, right? And also it's reflecting in the weekly time frame, like we saw. So now let's try to identify which area when the market was coming down was not tested. Now, this is the downtrend, meaning we're interested in marking our lows that the market is testing. So we have this, that the market broke and tested, right? Then also we have, let me just change the color here. We also have this level here that the market broke. Let me just change the color to blue so that we can not confuse ourselves. So this one here was tested. I'll just delete it. So also this area here was tested. You can see we have two tests here, meaning that this area and this area were both tested. So the market came back 2 times, meaning also this level here, the lower one, was tested. You guys can clearly observe. But now we do have an area which is slightly below here, just in these two red lines that we marked in the monthly level of the hidden structures that the price did not touch. Are you seeing? The market made this low, made the lower high, broke down and tested, right? Then made a low, this low here of this area where price is currently reacting to. Then we pushed up, reacted to this same level and went up. When we broke down, this area here was never tested, meaning we're having a confluence of this area here. So we have already identified the level, one of the levels that has not been tested. In case the market does not change trend, as we are going to see now entry time frame, it could be targeting this level above. Are we together? So we have identified one of the levels, meaning it's aligning perfectly with this area that we marked in the monthly time frame, right? I'm just going to extend it to my right. So another one, another area that we could identify is this area that gave us a retest to that level, this level here. Are you seeing this? This could also be another area that the market could be interested in stretching up to if the market does not change trend into this area here. Now, I've been mentioning change of trend. I've explained it in a couple of videos. You can just look through our videos. So let me just delete this so that we can see a clear picture when we go to the entry time frame. So these are areas of interest if you want to have a low risk, right, as a seller. So when I go to my H4, my favorite entry time frame, how do we observe? You can observe this is a weak momentum. I've already spoken about it as seen in the bigger time frames. This is a very weak momentum as it's going up. But in it being a weak momentum, it has not changed trend. We're still making highs, lows, highs, lows. Let me just clear it so it can be clear. We're making high, higher low, higher high, higher low, higher high. So we're just testing these levels. We've already broken to make new to start making lower lows and lower highs. So you cannot start selling in a bullish market. So there's a possibility the market can change trend from here. That's why I'm saying if it changes from here, was also where we are is the resistance. If it changes from there, it is okay. And starts making that, we can look for sales. If that change from there, there's a possibility we should wait for it to first react into this area or this area before we can have a change of trend so that we can start pushing downwards. So this is how you mark valid highs and valid lows. Are we together? All those levels can be valid, right? Even this one here can be valid, but this one here, this is the previous low that we have marked. You can see the market is reacting, but there's not a change trend, and we have some virgin areas. Let me call them virgin areas. These levels have not been tested. And now remember, when the market wants to get liquidity, like how most people call it, if you want to get money to move the price, right? That's the correct way to term it. They have to look for money to get people to lose, so they use that money to push price. Alternatively, you can say they have to get money in order to close their big positions. Remember, these people are trading with big amounts of money. So since they're trading with big amounts of money, there are large profits that they're making. And how do they make the money? From the losers. So they have to make sure that people are losing so that they can close their positions. Remember, for every buyer, there's a seller. So these are the positions that they normally use. So these are the areas of interest that they normally use. You know that everyone, not everyone, but most people, or the first phase of people may get trapped here by these few sales, and then they are taken out, right? Then also, as they know that some people could be having proper knowledge, but we just trade at levels. When the price touches this area here, they don't take sales. They're those type of traders. So they will also wait if those traders come into the market by just entering because it has tapped into these levels. Also, when the price touches, and then you just start taking sales. The market may stretch a bit before changing trend, and then you can lose your capital, and they close, and then they move in your direction when you're not in the market, you're not in the trade. So it's always advisable once price touches your area of interest. For example, it has touched this one, but there's no change of trend. So if the market stretches a bit up to here, also still wait for it to change trend in our entry time frames, which is H4. I've already showed you that it has not a change trend, still making highs and lows. We want it to start making lows and lower highs, lows and lower highs. Then you can jump onto the trade. So in case this market did give us, excuse me, in case this market did give us that proper change of trend that we're looking for, you can be targeting these lows here, right? Or some people say that since this is a head and shoulder, you can be targeting just this same distance to come to the neckline here. You can be targeting that same distance, just down. You put it down here. You can see it's almost the same, right? This distance from the head to the neckline is normally the same distance that the price will use to drop down. So this is how you mark valid levels that you can utilize. You can use it for any security that you want to trade, whether cryptos, synthetics, and the rest. Let's take another example. I'll give you another example. Let's talk about gold. So if you look at gold, right? We're having the market broke above this high here. Just to explain to you the concept, I'm not going to do a complete breakdown of gold. The market broke above this level, clean break, retested it, meaning that what we have next year, we have a virgin area that the price did not test. But remember, gold is making all-time highs, meaning that there's no resistance that we have backwards on our left-hand side. So meaning we qualify here to use a Fibonacci. So if you're to use a Fibonacci, you draw Fibonacci from the lowest point to the highest. You can see it has already touched our Fibonacci interest levels, right? So if I'm to draw here my area into these Fib areas and up to the 6:1 ratio, then I delete this, right? And then we check the next lower time frame. You'll observe that we have something you guys call an order block, though for us we just call it a level of support and resistance, or like a wall that the price has built here. You can see the price is reacting on it. So meaning that we have the market that has created for us a high, a low, a high. Of course, we never tested this. This was an improper retest, so the market came back to make a proper retest. So if we react and make a lower high and then we close below here on a weak retest, we shall be targeting this level here. Now, this means that if the market broke below here, the area that is valid for us to take a trade from is this level here. And then our target that is valid will be this one, because this was the last high that the market broke and never tested. You're getting it? So it will be our valid level to exit our price from. If the price again broke below and retests with a weak retest, right? Where will be your next target? You can just answer that before we do it. Your next target will be for you to look for levels that were not tested, right? The prices, the level that the market broke and never tested. For example, we have this area here. Or alternatively, you can say, let's first check if this area was tested. Yes, the market reacted a bit here, but we shall have, when the market breaks below here, we shall have these areas here, these levels of resistance. The market never tested this point. Are we together? So you just have to identify levels that the market left behind untested. Are we together? So that's what I wanted to share with you guys today. I hope it makes much more sense. Though the major purpose was to share with you guys a breakdown, a detailed breakdown on EURUSD and what you could be expecting. Also, don't forget to check the DXY. I've already spoken about that. When you're trading the dollar things, check the DXY. Also, other currencies, they have their own index for the currencies, like JPY has the JXY, GBP has the BXY, Euro has the EXY, and etc, etc. They all have their own. So I hope this helps you and you find it helpful. Have a great day ahead.